You have a treasury in your company. If you put your treasury into sovereign debt, you're going to yield 5% pre-tax, 3% after tax, and you're not going to beat the cost of capital. The cost of capital right now is 8 to 10% in the US. Easy. So if that's the case, your treasury is a liability, which means that any rational person would look at you and say you should decapitalize, you should run on the minimum working capital or negative working capital, and you should run on debt. But I'll give you another idea. If you actually are investing in something you expect to go up 20 to 40% a year for the next decade, you're beating the cost of capital by a factor of 2. That means the right thing to do is go back to your venture capitalist or your bank and just raise $100 million that you don't need and buy Bitcoin with it. Because if the business you're running doesn't work, you will have a business that's growing 20 to 30% a year scalably for the next 30 years. That will work, right? You'll double the 100 million 2 times in the next 6 years. So you'll be 200, 400 million. In 6 years, when the thing that you're doing right now doesn't work, you're going to have a business that's growing 20% a year off a $400 million base, which is a monopoly. So I think the number one, I mean, this is a simple hack, but every venture capitalist in the world is getting 2 and 20. They're getting a 2% management fee and a 20% participation. And their mandate is they have to invest in operating businesses that are private. And if they were to go and buy $1 billion of Bitcoin with limited partner capital, their limited partners would say, are you crazy? I could have bought the Bitcoin. So the VC can't buy Bitcoin, which is the risk-free return of 20, 30% a year. The VC can give you the $100 million. You can buy the Bitcoin. They end up with debt in a private company. You end up with $100, $200, $500 million business growing 20, 30% a year that's scalable, that you run with yourself and your CFO. It's good for them. They're going to make a fortune. They want to invest the money. The real problem in the world, and by the way, I'm back to the Tao of Steve. In the Tao of Steve, there's a guy sitting on the bed and he's smoking marijuana, and someone's saying, well, you know, like, why aren't you out there doing something? And he says, doing stuff is highly overrated. Okay? So here's the big idea, which is there's a couple $100 trillion of capital in the world that's debasing at 10% a year right now. And the big idea is just stop investing in toxic money, right? If you simply flip your treasury to something accreting at 10% a year, and you see, it's like everybody wants to they want to hire 100 people and do a lot of stuff that's risky, but really, this is very painful, but if I told you the water that you're giving your kids is toxic and it's full of pathogens, and that's why half of your children died, and you said, well, what's the big idea? I would say, give your kids clean water. Is that easy? Yeah. And if I said the food, well, the food's not cooked and there are worms in it and pathogens, and that's why you're dying. What's the big idea? Eat clean food, right? I mean, that whole idea is, what about clean air? Clean the air, clean the food, here's the one. All my doctors, they want to give me bad drugs and bleed me whenever I sneeze. What's the big idea? Stop taking the bad drugs and stop letting them bleed you. Okay, so if you're running a business and you're running a business on cash, the cash is losing 8% of its value a year. You're basically bleeding out energy on your balance sheet right now. And the simple idea for max performance is turn your balance sheet into an asset. Anybody could do it. And you know, what happens? Well, the MicroStrategy story is, we had a $600 million enterprise value with $600 million of cash, which was a liability. What do? We flipped it to be $600 million of Bitcoin and a $600 million enterprise, and then the Bitcoin kept growing. And the Bitcoin's been going up 40% a year. Bitcoin is going, I can't tell you what it will do, but I can tell you it will outperform the S&P 500 over time. That I'm quite sure of. So you flip your balance sheet to become an asset, and today the enterprise value of the company is $30 billion. You know, the stock's up by a factor of 10, the equity market cap's up by a factor of 20, and the enterprise value is up by a factor of 40. It took 42 months. Not 4 years. I haven't graduated from my senior year in Bitcoin. I'm halfway through my senior year in Bitcoin. But the profound idea is every company in the world has toxic assets on its balance sheet. They're all liabilities, right? And we've taught, the conventional wisdom in corporate finance is if you have capital, give it back and dividend it out. Facebook is buying back 50 billion of their stock and dividending out billions of their stock. Apple is buying back their stock and dividending out their stock. Scratch your head and think about this a second. I'm going to apply this to Harvard and MIT. Give back the endowment and just raise the cost of the tuition 20% a year and stack twice as many students per class, and that's how you fix the university. Right? No, right? How about this as an idea for your family? I want you to take all the money your family has, I want you to give it away to charity, and I just want you to tell your wife, your husband, your kids just to work harder and ask for a 15% raise next year. And that's how you're gonna fix your family. I said, they're both pretty silly, right? And like, you would never in a million years have that as your strategy. We give up all the capital and we work harder. But you know what the corporate playbook is? Give up all the capital, raise your prices, work harder, grow your cash flows by 15% a year, and then you'll be fine. And you know, that's why 99% of the companies fail. That's why the life expectancy of a corporation is 10 years. And you know what? I mean, Harvard, Oxford, Yale, they lasted more than 10 years. Did they do it by raising their prices 10% a year and working harder? No. In fact, there's not much productivity boost in any of those places in 500 years. So here's the profound idea, which is, you know, if we adopted a different financial model in corporations, you could have companies last for hundreds of years. You don't have to die. Right, for example, you're a dentist. You know, why do I have to raise my prices 10 or 20% a year to be viewed as successful as a dentist, right? It's because, I'll tell you why, because we keep expanding the currency supply by 10%, which means the price of everything you want to buy goes up by 10%, which means you have to grow your cash flows by 10%. And that's why the Magnificent Seven generate all the returns in the S&P 500, and there are 493 companies that return nothing, zero, right? They can't, and by the way, it's not their fault, right? We blame them. We blame the companies like we blame the workers for not working harder. It's not their fault. You cannot outwork inflation. And we're back to this issue of, if the person that runs the currency or the money printer just keeps printing 20% more money or 10% more money a year, you just stop the heart. You basically create a heart attack for every worker in the economy. And so my advice to anybody who's a CEO is don't work harder, work smarter, but really you're in a rowboat, you're trying to row, the wind is blowing. Get yourself a sail, put the sail up and let the wind blow you instead of trying to row across the Atlantic. You're not going to make it.